What is going on today, YouTube? Today, are we in a bear market in this December of 2018? Well, I like to look at these charts, so we're going to look at some charts today. And since we're expecting to have a crash every 10 years, as history shows, we're going to break this down the whole way from 1978 the whole way to 2018. While I'm recording this is on November 29th of 2018, so we have one more day, that is Friday, November 30th, before we get into December of 2018. So let's get to it. Now, for this video, we're just going to look at the SPX. These red lines right here, I drew these in, and I will show you why throughout the video. But we're going to start 1978. We're looking at a 10-year window, just so I can make the chart a little bigger. It'll make a lot more sense this way. So from 1978 to 1988, we're going to get 1992. It'll work for this video. All right, 1978. Here's 77, 78. And these are the end of the years. So this is the end of 1978, so we're going to go from here. 1977, we're going to look 10 years. 1977 to 1987, guess what? 9 years. Market drops, end of 1987. But look at this. This is the coincidence I want to point out. That's very, very interesting. Look at this percentage right here. 1977 to mid-1987. Stock market went up 281%. Remember that. Just remember between 200 and 300% range. And we had a crash. And yes, I know it's not exactly 10 years, what so forth. But we had a crash. We had a crash of about 28, 29%. Okay, that was from 1978 to 1988. Now, we're going to look at 1988 to 1998. 1988, that'll be the beginning of 1988. We'll go right about there to 1998. Guess what? Stock market went up. We'll go back to here. Stock market went up about 400% in that 10-year span. Guess what? We had a little crash. This was a little scare. It was like a little fake out, but it went down 15% after 10 years of constantly going up. So now, we're going to look at 1998. Like I said, these aren't perfect in 10 years, but look at 1998 we're going to go the whole way over to here. Alright, 1998, stock market's right in here. Goes up. So you can say that little fake out wasn't much of a crash, 1998. Real crash was in early 2000s. But it went up another 50%, so you can go up to 400%. And since we consider this a little hiccup, this was the little hiccup that we had in the previous zoom in, went down 15%. So we'll start from here. So the stock market went up another 50% before it actually, now this is a legitimate crash. This was like a little bump. This was the crash. So, crash went down 50%. Okay. And the stock market held steady pretty much from between 1996 the whole way to 2012. It just went in the range from 800 to around 1600. Which, yes, I mean, you're getting 84%. So you're almost doubling your money in 5-year spans. But look here again. It's trends down. 2007, 2008. Went down. We crashed 50%. Okay. So now we're going to zoom out back in from 2008. From the crash to today. Ironically, this is the coolest part. Look at this. From our crash in 2008. 2018. Hold on, I got to move this over a little so you can see. 2008, 2018. Our high. 275%, almost 300%. That was our total gain in the market. You can see those percentages back here when I'm moving this cursor. But that's almost a 300% gain. Ironically, didn't I say pay attention? It seems like the stock market goes up around 300% every time before it makes a major crash. And no, I am not predicting a crash, and I am not saying to do anything if you have money in the stock market. But it doesn't. Until you really break down this chart into 10-year segments, you would not expect this to be that much of a gain compared to what it looks like now. Just because when stuff, it always had the same price action. It just looks like it's going up faster than ever right now because it has to in price volume to keep on getting these returns of 300, 400%, but it is actually still going up the same amount. It is still gaining the same amount that it always has throughout the history, for the whole way from 1968 to 2018. It always goes up about 300% and then it crashes. 300% crashes. This is just, it's nothing new. It doesn't look like it's doing that back here, but it is. You just have to zoom in because prices are so much higher than they were back then. So if we go back to this span, so we'll go back to here, 1978. 1978 to around 1988, 260%, then it has crash. Same thing. And then from 1988 up to here, went up about 600%, but it did have this little crash right here, which scared everyone. So all I'm trying to get out of this video and trying to explain, like, everyone thinks the stock market has to go up and it's just going to go up forever and ever and ever, but that's just not the reality. It will crash eventually, and it recover. There's always a crash, better known as correction, and then there's a recover. But it's been doing this ever since back in 1968, 1978. It probably even did the whole way back here. But I'm just not going to go back that far because there was a lot of different stuff. There's a lot of wars back then, a lot of stuff that really affected the economy compared to ever since like 1990. I mean, yeah, we've had the housing market crash, the tech bubble boom, all that good stuff, but no major wars or major world disasters. And I just wanted to show that this price action is normal. We are not doing anything out of the normal that we have been for the last 30 years. It's happening just as it's happened 30 years ago. So realistically, we will get a crash eventually. It's inevitable. Everyone thought back here was a crash. But it wasn't. It was like one of those little fake outs. Just like back in here, where we had like a little fake out. Like a 20% loss. That's just like a normal correction. It's not really a crash. It's not a bear market. It's just a correction. A bear market, I mean, that's when you're dropping 50%. Like it did in 2000. Like it did in 2008. 50%, 50%. Had a little correction here. Not technically a bear market. It crashed around 15%. But then you go to here. So if we actually had a real crash, say we had a real bear market, our price from our all-time highs to lose 50%, it's going to be off a little bit just to get that percentage in the picture up there. But to lose 50%, we would be going back down to like 1,500 levels for the S&P 500. That would be, right here is a 46% crash. And if I was actually on this line up here, we'd probably be pretty close to a 50% mark. So if we go into a true bear market, I could definitely see prices of the S&P going the whole way down to around 1,500. And that would be my definition of a bear market. These little corrections, we are in a correction right now. Because if you look, I mean, it's not perfect, but we're only in a 12% loss, kinda, off our highs, not even that much. With where the S&P is today. But we're right around it. We're right around that correction mark. If we do go into a full-on bear market, based on the past, based on these charts, and based on, I draw little support resistance lines. Anywhere I see like a trend, okay, it's trending between here and here, high and low, high and low. So that's what you got your, back in this time when it's trending in here, you got your support line here, you have your resistance line here. Comes down, it bounces. Goes back up, comes up to here. It hits the last high, and it goes back down. Bounces off the low. Goes back up. So when it beats this price point right here, that's big. And when we had this little fall in the market in 2015, a lot of people probably expected it to go down to like 1,500 level, but it did not. So if we had a true on bear market, it would go down to that 1,500 level. Now it might hover around here for a while. It might hover around 2,200 for a while, just because that would be the next point of support for where we are. But a true bear market, we would go down to 1,500. 50% loss, we'd go down to 1,500. And if history repeats itself, we will be heading there eventually. Who knows when? Could be today, could be tomorrow, could be next week, could be next month. It may be a hick. It doesn't happen for another 5 years. No one knows. So if you are the long-term investor and you are planning on staying in the market for a long time, you cannot get worried about these day-to-day fluctuations. That's it for the video, guys. If you got any questions, leave a comment down below. If you liked the video, leave me a like. It gives me a little, helps me out, making sure I'm giving good content to you guys. And if you like videos like this, subscribe to my channel. And I will see you guys in the next video.